Absolutely. Just want to remind folks that we are live streaming and recording this meeting. Both of those have already started. Jerry Abrahams.
Here.
Phil DeFranzo. Catherine McKinnon.
Here.
Commissioner Perez. Franklin Perry. Chelsea Ross. Sarah Sanders.
Here.
We do have a quorum in attendance for the meeting.
Very good. Let's go right to our agenda items. The first is a resolution for 2025 Series O bond sale. Over to Hazim.
Thank you. Good morning, everybody. Happy Thursday. The resolution is to authorize CHFA to issue up to $350 million of the Housing Mortgage Finance Program bonds in one or more issuances. The sale will allow CHFA to raise additional lending proceeds and fund about 1,261 first-time homebuyer loans. As of September 15, CHFA had an aggregate net pipeline of about $338 million. Based on the interest rate environment, CHFA plans to utilize a structure consisting of fixed rate and variable rate and expect to close the issuance in November. To leverage CHFA tax-exempt issuance capacity, CHFA intends to pair the tax-exempt issuance with taxable bonds. CHFA has informed BofA Securities to lead the third single-family financing in 2025. I'll be happy to answer any questions regarding the resolution.
Azim, anything unique on this financing?
No, it's similar to the financing that we closed in June, the 2005 Series C.
And Hazim, it's BofA's turn. Is that you're just going in the rotation, or is there another reason why you chose them?
Yes,
this rotation. Okay.
Yeah.
Do you ever go out of rotation if the underwriters like have a good idea and like pitch a good idea? You'll take them out of rotation and give them a deal.
Yes, we are actually doing just that for the multifamily transaction, where JP Morgan is leading the deal for the next multifamily issuance.
Okay, good. Thank you.
Thank you.
Any other questions? May I ask for a motion?
I'll move. Gary.
Second.
Second, Kathy.
Any further discussion? Call for a roll call vote. All in favor, say aye.
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 Opposed? Was there an opposition? No. Opposed? Abstaining? The item is approved. The next item is the resolution regarding the selection of an external auditor. Back to Hazim.
Thank you. For your
Madam Chair, if I just want to make sure the record reflects that I joined the meeting.
Oh, thank you, Commissioner. And did you vote
I
in the
wasn't around when you
affirmative?
did. Yes, I did.
Thank you. Back to Hazim. Yep.
Thank you. For your approval, a resolution to select an external auditor for CHFA financial statements. As required by our statute and procedures, we are to conduct and publish a RFP once every 3 years for external auditor. The appointment will be effective for 3 years or for the calendar years of 2026, 27, and 2028. The last evaluation was done in 2022. In summary, we received 4 proposals, and each proposal was evaluated using a set of criteria, including weighing the firm's experience, qualification, and availability, and fees. Accordingly, we are recommending Whittlesey PC to continue to act as CHFA external auditor. I'll be happy to answer any question regarding the resolution.
So just to clarify, their existing auditor, and we're looking at retaining and extending them for 3 years. And just to confirm, I think after a 6-year engagement, you would have to rotate to a new firm. Is that right?
That's correct. So if the board approves the recommendation, they have to sit out if we go out for another RFP 3 years from today.
Just out of curiosity, sometimes here at the state, we've had them rotate the partner and been able to keep the firm a little longer, but I don't think you have that option for the.
No, we don't believe so, based on our interpretation of the statute.
Any other questions from anyone on the selection process and the recommendation? With that, I'll ask for a motion to accept the recommendation to retain Whittlesey for another 3 years.
So moved, Kathy.
Second, please.
Second, Chelsea.
Thank you, Chelsea. Any further discussion or questions? Seeing none, I'll call for a verbal vote. All in favor, say aye.
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 Opposed? Abstaining? The item is approved.
Thank you.
Boy, we're doing good here. Next item is financial reports. Allison Murphy.
Good morning. Before you are the August financial reports. On the revenue side, mortgage loan and investment interest revenue are coming in 22.5 million over budget through August and 34.6 million higher than last year. The increase in the authority's investment portfolio is driving the year-over-year variance, as the portfolio is 946 million higher than it was the same time last year. On the expense side, bond interest expense is 10.3 million above budget through August and 30.4 million higher than last year. Propelling the prior year variance is the $967 million increase in outstanding bonds compared to the same time last year. Servicer fees are 3.2 million higher than budget through August and are slightly higher than prior year. Administrative expenses are coming in 4.7 million below budget and 398,000 higher than last year. When you exclude salaries and benefits of $20 million, current year expenses are 339,000 higher than last year. And lastly, the change in net position is above target by 18.7 million. Are there any questions?
Strong performance as usual. Any questions? Seeing none, on to the next report, production and delinquency report, John Chilson.
Good morning. For the month of August, the authority purchased 262 loans totaling $73.4 million. That's 40 loans less than August 2024, or $7.7 million. However, year to date, the total production is 98% of the production we achieved at August of 2024, suggesting that we're on track to still come very close to, if not reach the $1 billion mark in loan purchases for 2025. 95% of the August production was securitized. That's 249 loans totaling $69.5 million. The remaining 13 loans for a total of $4 million were whole loans. The average loan size for August was $279,000. And the end of month balance of our mortgage-backed security portfolio was $3.9 billion, which was $49 million over July. And for July, the whole loan portfolio declined by 32 loans of $3.6 million, ending with a portfolio balance of $1 billion. Our whole loan delinquency rate was 5.76, which is in line with or unchanged from the prior month and in line with the nationwide average. And our carrying balance of loans in foreclosure year over year is virtually unchanged at approximately 100 loans for $11.4 million. For August, the authority also funded 69 down payment assistance loans for $870,000 with an average loan size of $12,600, and 236 time to own forgivable loans at $5.6 million with an average loan size of $23,800. On our multifamily portfolio, there were 4 new closings in August. The overall portfolio declined by 1 to 612 loans, totaling $1.5 billion, and the rate permanent loan delinquencies and the multifamily delinquency rate for August was less than 0.5%. Any questions?
Hearing no question, let's go on to the state auditor's report for calendar years 2022 and 2023.
Hey, On August 14, the state auditors issued its audit report on CHFA for calendar years ended December 31st, 2022 and 2023. We just want to share and inform the committee that the report did not include any findings, and the auditors cleared a prior finding, and that was in relation to the limited equity co-op. I'll be happy to answer any question. We just wanted to share the good news.
Well, congratulations, because a lot of times they will find something. That's been my experience. Congratulations.
Hazim, have you ever had to Sarah's comment, have you ever had a clean state audit report like this?
Yeah.
Right.
So the finding that we had prior to this one, before that one, like we had continuous clean findings.
Okay, all right, so it's pretty normal. Okay, because still usually these guys always have to find something, right? So they always have to find something.
I mean, I do want to compliment Hasim and his staff, but I do disagree that they always have to find something
They don't, all right.
Yeah.
as an auditor. And I know the people there, and I got unbelievable respect for them.
Yes.
If it's there, it's there. If it's not there, it's not there.
Yep. I know some other quadrants have been getting totally clean audits as well. So
Yeah, quite a few this year. And there's quite a few that's got some really bad, audits, where they have 17, 18 findings. And if you read them, they appear to be very reasonable on target.
Yep, it's good to hear. Thank you.
Yeah. But I mean, I don't want to take away from the fact that it was a great audit and, congratulations to the team,
yes.
It still takes a lot of work because if there was something, they will find it, in my opinion. I has disagree that they, come in with the attitude that we're going to find something no matter what.
I agree.
Yeah.
Any more questions or discussion on that item? We're on to Housing Revenue Bond Series 2025 A, B, and C.
Okay, thank you. In 2022, the board authorized CHFA to adopt a new bond indenture to supplement the existing general resolution. And issuance under this new indenture will not carry CHFA's general obligation or be backed by the state's capital reserve fund. Last month, CHFA closed the first issuance under the indenture, an acquisition and rehab of Augustus Manor, a 105-unit project located in Stamford. Later today, we are scheduled to close an acquisition and rehab of Kimberly Place, a 116-unit project located in Danbury, and an acquisition rehab property by the name of Leonard Street, a 53-unit project located in Norwalk. All three bonds are backed by Fannie MBS, and I'll be happy to answer any question about the issuance. I will also add that when we started the calendar year, I told myself and the team that we are going to close at least one issuance, and we ended up closing three. So definitely beyond our expectation.
So the indenture you normally issue under is rated AAA, and this is rated
AA1 by Moody's because it carries the same credit as the US government.
And how did it price versus your normal indenture?
It was a very interesting exercise. We learned a lot by issuing the bonds under this new structure. I can say that when it comes to bond pricing, our bonds is better. We will price through a Fannie execution. In part because the deal is slightly smaller, so yeah, it's hard for us to attract some high net worth retail investors. And then when it comes to institutional, they only care about the bullet bonds because this type of structure, the way it works is they would amortize and then it will become due after the tax credit compliance period. So it is a balloon structure.
Commissioner Perez, you have a question?
Yeah, I mean, I want to go back to the rating.
Yes,
Is it because Fannie Mae is backing it up?
yes, that's the reason why.
Okay. Yeah, because I'm going like, it makes no sense to me if we have a better rating where they don't give it to us. Unless it's because, the
Yeah,
entity that is,
yes, because
Okay.
the bonds, while while the bonds carry our name, the
Right.
credit is solely based on Fannie, and Fannie's credit is based on the US government.
And that's because they're guaranteeing it.
Correct. Correct.
Okay.
They are providing the backstop.
Yeah, thank you for the clarification, because I would have thought that the first source of repayment would be us, not Fannie. So therefore the credit should be based on our credit, but it is what it is.
Hazim, on that, how do investors look at that then? So if Fannie and Freddie, if GSEs get spun off and privatized, does the government guarantee stay in the US Treasury explicit guarantee now stay, or does it transfer over?
It depends to which lawyer you are talking to, because when you talk to investors, some of them they believe that while there's a lot of rhetoric or plans about Fannie and Freddie guarantee, there's always this belief, just like Section 8 and other type of entitlement program supported by the federal government, that there will be that guarantee, or it will be figured out, because it is a $1 trillion market. So it is like they want to talk about it, but nobody is going to opine on it because they believe that it will work itself out.
Yeah, that's probably why, and that's got to impact pricing, right?
Yeah, right.
So these series were backed by Fannie, but is the indenture written to always have that kind of a backing, or could future series be different?
Future series could be different. So what we did put into the indenture was it needs to be backed by some form of a federal guarantee, because we purposely said that this is to supplement CHFA master resolution. And when we did so, we did not want to provide any sort of credit backstop to the resolution. So any type of engagement or structure that we perform in the future, we do need to wrap the collateral with some other credit, and it can even include bond insurance, but it will not come from CHFA or the state.
So I know the master indenture has, AAA ratings, but does CHFA itself as an entity have a rating, an issuer?
No, we forego our issuer credit rating back in 2001, when we were upgraded to AAA.
You forego it. You what does that mean exactly? You said
So we were talking about the history behind the AAA credits. Back in the early 2000, the board and management decided that it would be best for the resolution to have a stronger rating, because back then the state and CHFA bond rating was the same. And the state's rating at the time were being being under review for an
Yes.
downgrade. So it was decided at the time that CHFA, where it had its own operating fund, to transfer the operating fund that provided the issuer rating and
Yeah.
deposited into the general resolution. That additional infusion of capital gave comfort to the rating agency and then raised CHFA's rating to AAA.
is that formula change in any way with all of the state's upgrades?
No, in fact, I mean, in terms from the investor standpoint, they just feel much better, even though in terms of the waterfall, they've always known that the state has this backstop through the scarf. So we have what's called a double barrel rating, where we have the bond rating and the underlying rating, which is the state's rating. So the fact that the state just got upgraded to AA, it just strengthened the perception that the indenture is resilient against any, cash flow tests.
Well, that's good to hear that the state's guarantees getting you something. Because I know the rating is higher than the state still, but that's good to hear that it's supporting.
Yeah, it's something that we've always tried to educate, especially when we are talking to crossover buyers, or buyers that mostly operate in the taxable space, where they're trying to evaluate CHFA's rating. They see the AAA, but they don't understand quasis, and they're just trying to wrap around, how everything works and whether or not any investment by them is in fact secure. But when they hear that there is this potential infusion if the reserve fund goes below the requirement, that the state would step in, it gives them comfort to present to their credit committee and consider investing in CHFA bonds.
Okay.
I'd like to
Yeah.
add a couple
Go
of,
ahead.
if you don't mind.
Yes.
So one is that this particular structure has some benefits for us from a, I'm sure Hazim could go into more detail, but when the rating agencies look at our balance sheet and they look at the loan assets, the way that they look at them under the larger indenture is to view them as uninsured loans, because that's really what they are. They're uninsured from the perspective of they don't carry a wrap or a guarantee by any entity. To that extent, they haircut the asset, and what that does is it provide it has the effect of sort of lowering our available net assets, if you will. This type of structure allows us to sort of diversify our asset classes. It's not unlike what we do in single family, where we have an MBS structure. So this is kind of replicating the single family financial asset types to create an MBS structure that can be valued differently and just diversify it a little bit. The second point I want to make is that we've received a lot of feedback in the last few years about there only being one entry point for developers to come in requesting tax credits and bonds. And so we've been looking at how we can provide other structures that could still work within our that would still satisfy some of the requirements that we would want to have, like we wouldn't want to do pure conduit, because it sort of doesn't really fit within our program structure, but this type of thing has allowed us to create an MBS structure, and then we can actually, in the case of Augustus Manor, it was originally a housing authority deal, and they went to OPM for the volume cap, and it turned out that OPM didn't have any more cap, and so we were able to come in with this type of structure, preserve the existing structure that they were looking at without re-underwriting everything, and get to closing very quickly. So that was that was really a win-win, I would say, for CHFA and for the developer. Azim, did you want to add anything to that?
No, I think we're good.
Well, it's interesting because you've had the same master indenture for how many years? 50 years, maybe?
Yeah.
So this is interesting new way of financing, and it'll be good to watch it, how it proceeds. Any other questions on that? Before we get to the minutes, and maybe not for here, but Nandini, maybe for the full board meeting, I'd love to hear about, the potential of a federal shutdown and some of the layoffs that are being talked about this morning, how that might affect CHFA. And maybe that's better for the full board meeting, and maybe you're going to address it anyway.
Sure.
Okay, so let's not take time here. Let's move on to approval of the minutes of the Finance and Audit Committee of July 31st. Take a verbal vote. All in favor?
All right.
Aye.
Opposed? Abstaining?
I will be abstaining since I did not attend the meeting.
Thank you very much, Commissioner.
Was there a motion, Sarah? Sorry.
Sorry about that. I think I did go pretty quick there. May I have a motion to approve the minutes? Second? Okay, motion.
Second.
Any further discussion or comments? Okay, let's try it again. All in favor?
Aye.
Aye.
Aye. Aye.
Opposed? Abstaining? One
I
abstention.
will abstain again.
Very good, thank you. The minutes are approved. Any other matters for today? Okay, thank you, everyone. We'll see you on the other side.
Thank you.